Wonderful good day, ladies and gentlemen. Precious Metal Summit 2014, and with me here is now an outstanding, let's call it, new gold producer, Klondex Mines. And I'm very happy that I have here Paul Huet, who is the CEO and also, I think, some of the large shareholders of the company, if I remember that correct from the last time we spoke. And we want to talk again about your company and about an update, as I think you performed this year really, really well. So give us a short insight about this year, what happened. You started the production. You are steady now.
Thanks very much, Johan.
What's going on?
What did you say? Yeah, thank you very much, Johan. Klondex has really changed and evolved in 2014, as you know. This is our first year of production ever. As within any underground operation, we have two operating underground mines. Our focus is always going to be primarily the safety of our employees, and we went 2 years without a lost time accident at Fire Creek, which is unheard of in our industry, while we're generating free cash flow. So we're building two mines in northern Nevada. Midas was bought in February from Newmont, and at that time it didn't have a lot of life left to it. Since then, in fact, in Q3, we've just announced a new resource at Midas that will forever change Midas and our company, for that matter. We've announced over 800,000 ounces in all three categories, measured, indicated, inferred. We tested that at $800 gold. That, together with Fire Creek, now puts us in over 1.5 million ounces in northern Nevada. So we've got two operating mines that are feeding a central mill that are approximately 100 miles away from each other. So we haul the Fire Creek ore from that project over to the Midas mill. The mill is running today at half capacity. Some of the major milestones we've accomplished with respect to construction in 2014 were the rapid infiltration basin at Fire Creek, which was critical for us for our water management system. That was permitted, constructed, and completed. It was the last major construction component we needed at Fire Creek. We also did a big project with a ramp expansion, allowing us to bring in larger size trucks. We went from 15-ton trucks to 30-ton trucks, and the reason we did that is because we had 30-ton trucks when we bought Midas. We had 5 trucks. We were able to ship 2 of those trucks to Fire Creek, so we didn't have to spend any capital. But more importantly, as the mine grows and it extends, we are able to really reduce our operating costs with respect to transportation by having one operator on a 30-ton truck instead of a 15-ton truck. What does it mean? What does it mean to the shareholders? When we look at our company, as we continue to grow, we announced our results for Q2, which were very healthy. We were at $7.30 an ounce Canadian. That's about $6.57 an ounce US, which is
fantastic.
Real cheap. Yeah. And we increased our guidance this year. So for those of you who want to do some bit of math, but we had initially planned to do 70,000 to 85,000 ounces gold equivalent. We've raised our guidance to 95,000 ounces. So
that's not normal this year for most of the companies.
It's not common for many of the juniors out there, actually. We've really been doing well. The team have been executing on all cylinders, and I'm quite proud of them. And again, it really starts with that safety, right from the beginning, driving that home, making sure we don't miss time, and then making sure both operations are running efficiently.
Yeah, exactly.
With that expectation, we have about $30 million, Johan, in capital this year. So a big year for Klondex between both operations, where we're seeing a lot of money being spent. So 30 million over 95,000 ounces, you can do the math. It's not difficult, but you can quickly calculate what some of our cost per ounce would be on our capital costs.
Definitely. And the 30 million you have then financed out of the cash flow, or how did you do that?
That's a good question, actually. That 30 million came, some of it from a private placement that we did in May. We actually did a bought deal for $14 million. We raised it to an additional 10%, which brought it to about $16.1 million, again a bought deal, at $2, without a warrant. And the rest of it is coming from Treasury. Our balance sheet today is much different than where it was 6 months ago, for that matter. We announced at the end of Q2 a little over $30 million. Our financials are coming out in 10 days, Johan, and you'll see the results of the production. Q3 production, we sold over 28,000 ounces of gold. Obviously the best quarter we've ever had in our company's history. A steady growth, and Q4 looks to be similar in trend with ounces sold. So it's going to be a wonderful year for Klondex and its shareholders.
Yeah, fantastic. Is there any long-term debt still associated, or what is the debt situation?
There is some debt still. We have $25 million in debt, in Canadian debt, with 3 different companies, Jones Gable, K2, and Royal Cap. We will have the ability to pay off that debt should we choose to in the first quarter. By the end of this year, we're going to have the flexibility to decide whether we want to pay off that debt or keep the debt and keep the cash in hand. Those decisions are going to be taken really at the board level. The board is going to be heavily included in those decisions. In fact, that was one of the big reasons we just hired a new chairman. We've hired a veteran, a seasoned chairman who's quite experienced. His name is Rich Hall. He was appointed to the board and chair approximately 6-7 weeks ago. Rich comes with a tremendous amount of experience. He aided us and assisted us with the acquisition and purchase of Midas when we bought that from Newmont. Obviously a critical component to our company.
Yeah.
Buying Midas was a game changer for us. You know,
But you made it.
We did it. We actually did it. A lot of people didn't think we could pull it off, actually. But we really worked hard. Rich was alongside us, guiding us, mentoring us. Having him join the board is really going to demonstrate it's really going to help us at that level. We really need that help. And he's going to help us make those decisions about cash. You know, it's a unique position to be in, to decide what do you get to do with the cash. It's not a position I've been in many times.
I would say very comfortable.
Yeah,
definitely.
It's nice, and we want to make sure we do what's best for our shareholders.
Yeah. Let me come a bit more now. As I saw your quarterly numbers. Actually, third quarter was again fantastic to me. It shows to me a proof of concept what you have done, because now you have it looks to me like a steady production. Yeah, and I think the fourth quarter would be, I assume, the same. Yeah, of course, you cannot speculate on the fourth quarter, but I'm sure you want to achieve the same. Can you give us a bit more guidance also for 2015? What you want, what you may achieve, or what you want to achieve? A bit about the plans, if you're allowed to talk about it.
Sure, absolutely. Look, for us at this point, it's about consistency.
Yeah.
We need to make sure that we consistently deliver on our promises. And for the rest of the year, as I mentioned earlier, we have a guidance of 95,000 ounces, up from the 70 to 85. Next year, we're looking at a similar range. This year, we provided ranges. Next year, we're looking between 105 to 120,000 ounces. And what you have to remember, Johan, is this is our first year of production ever. So next year is on the heels of this. We're really going to be looking forward to maximizing synergies, making both operations work together, the management teams, exploring other synergies with respect to human resources, payroll, mobile maintenance, engineering, geology. It doesn't just stop at the mill or the fleet of equipment for that matter. There are a tremendous amount of synergies that we will be able to take advantage of as we continue to unlock the value of both these operations. That is our focus now, unlocking the value at both these operations. We have 2 great assets located in northern Nevada. Organic growth is our focus right now. We don't want to be distracted by many other things. The focus is making sure these 2 mines get to 80 to 100,000 ounce producers, somewhere in that range. That'll be a really healthy company.
Actually, I like organic growth, what you said. I really love that, because you have much less surprises than buying something new. Because you know your operation.
Well, we have the advantage of having spent a lot of years at Midas, so we know the assets quite well.
Exactly. Perfect. Let's come a bit to the exploration side. I'm not sure if you have said it. What is the mine life by now for your 2 projects? That's one thing. And the other thing is, what are the plans for, let's say, the next 1 or 2 years on the exploration side? As you make money, you said it, you are cash flow positive, you are profitable, so you have also money to put again something into the ground.
That's quite accurate. So this year at Fire Creek, we announced a PEA that demonstrated approximately a 5-year mine life. In Q2 and Q3, 40% of our ounces produced from Fire Creek came out of veins that were excluded from the PEA, or had a very small amount, therefore. So what we know today is that Fire Creek has a lot of exploration upside. We expect to spend next year about $15 million in sustaining capital at Fire Creek. That'll be waste development and drilling. Midas, because Midas has been really starved for capital, it hasn't had a lot of capital over the last couple of years. We had an intense focus on the exploration. So what we did is we carved out $26 million over a 2-year period at Midas, just for exploration. And
very good.
The new resource that we just announced saw some of those results early on. So we had a resource of 820,000 ounces at Midas. That would have spent maybe about 4 million of the 26 million. So it is really the tip of the iceberg. We're just starting. So we're really looking forward to some success in exploration at both operations, therefore generating that organic growth that we're seeking to fill that mill.
Which delivers more mine life, of course, then.
Which will add definitely mine life to both operations.
Fantastic. Yeah, then thank you very much, Paul. That was a very good insight. I like it. And yeah, all the best for that. And I hope that we can report soon about a good fourth quarter and, of course, about a good 2015.
Thank you very much.
And we keep fingers crossed for you. Thank you. Ladies and gentlemen, that was Paul-André Huet, the CEO of Klondex Mines. You heard it, $675 cash cost. Really outstanding. They are in Nevada. They are producing. They make money. They are not only cash flow positive and also lots of exploration upside. So have a look at the company. Check it out. Thanks and bye-bye from Zurich.